Hey guys, welcome back. So the Ark ETFs have been on a bit of a roller coaster recently. We can see the flagship ETF, Ark K, had started the year and shot up over 25%. Then more recently, it had come crashing down almost 30% and has now pulled back over 10%. So clearly very volatile at the minute. The question is this time to sell out of the funds, or is this nothing to worry about? Well, in this video, I've got some important info for all Ark investors, and in fact, any investors concerned about what to do in times of high volatility. I'm going to be reviewing what Cathie Wood has recently said to help put things into perspective. So we'll be covering her thoughts on the current volatility and the Ark ETFs crashing down almost 30%. We'll try to answer the question that's on everyone's minds: are we in a bubble? As a lot of their work is built on Wright's law, I'll quickly explain exactly what this is. And the other big question is, are we headed for inflation or deflation? Cathie Wood also explains that volatility is a gift for a certain type of investor, which we'll also be covering. As always, if you do find anything useful in the video, be sure to drop a like. That would be very much appreciated. Okay, first up, the ETFs are experiencing extreme volatility. Is this something to worry about? Let's take a look.
It certainly has been an exciting week. I guess you could call it an exciting week. It's given us lots of opportunities. After the last few weeks, I know there's a lot of fear, uncertainty, and doubt evolving in the world out there. But we're doing a lot of original research. We have a 5-year investment time horizon. And we are truly excited about the opportunities that the last few weeks have presented us. According to our projections, what these last 2 weeks have done is handed those who are averaging in to these sorts of strategies, any innovation strategies, a gift, because we do believe we're on the right side of change, and disruptive innovation, transformative innovation is going to deliver exponential growth trajectories for many of our companies. In fact, most of them. The growth rates are enormous, and I think some people find them unbelievable. We haven't seen anything to change our research assumptions or conclusions. In fact, during periods of turmoil and elevated risk and fear, uncertainty, and doubt, innovation actually gains more traction faster.
So Cathie Wood is saying that fundamentally nothing has changed. There hasn't been anything to warrant this fear, uncertainty, and doubt, also known as FUD. She explains that for people averaging in, meaning dollar cost averaging, which is basically where you're investing consistently every single week or every single month, no matter what, then you're actually being handed a gift. It's actually very common for the marketplace to act irrationally, and Warren Buffett calls this Mr. Market. And this is where the prices are swinging high and low, but it's based on fear, uncertainty, and doubt, and not actual fundamentals. Cathie mentions that in times of extreme FUD, innovation can actually gain traction faster, which is a good thing. Okay, moving on. So we have many experts right now calling for a stock market crash. And the big question that everybody wants to know is, are we in a bubble? And to be honest, there are many indicators suggesting that we are. We can see the Buffett indicator, which measures the stock market divided by GDP, and this chart goes back to 1950, so over 70 years, and we can see right now it is the highest time in history. Yes, GDP is going to be down because of the virus, but still before 2020, this is well above the exponential trend line. And this is the Shiller PE ratio, measuring stock prices by company earnings. And this chart goes back over 100 years. And you can see right now we're almost at 35, which yes, it's not as high as it was in the dot-com crash, but it's higher than every other time over a 100-year history. So, Cathie Wood, I ask you, are we in a bubble?
And just to address one other question, this bubble question. We are not in a bubble. how many questions we get about being in a bubble, and how much fear there is that we're in a bubble, is because the seeds of what we believe will happen during the next 5 years, so these 5 innovation platforms involving 14 technologies, the seeds for all of them were planted more than 20 years ago in the tech and telecom bubble, and even before that, so the PC and the internet together. And then the internet, of course, the bubble, caused a rush of capital into they were actually the dream at the time. The dream was right. It was just 20 to 25 years too early.
So Cathie Wood does not think we are in a bubble. She mentioned that the big rush into tech companies in the year 2000, which ended in one of the biggest stock market crashes of the last 100 years, was in fact correct. It was just 20 years too soon. She says that now technology and innovation has all come together and it's about to take us on a whole nother level. It's not going down. Okay, moving on. Ark Invest gets a lot of criticism regarding their growth rates. In their presentations, they often refer to a CAGR of 82%. CAGR just means compound annual growth rate. Numbers like compounding at 82% seem unbelievable for many people and companies, where traditionally 10% would be classed as very good. Here's what she had to say.
Fostering a lot of skepticism, especially the growth rates and the sustainability of the growth rates. But our research based on Wright's law gives us an extreme sense of confidence that we are on the right track and that truth will win out. We have a 5-year time horizon. That is a luxury. That's a luxury. And the difference between linear growth and exponential growth in the early years, when electric vehicles are at 500,000 a couple of years in sales globally, last year 2.2 million, in those early years, because the bases are so low, there doesn't look on a graph to be that much difference between linear growth and exponential growth trends. You give that a few more years, and the difference is quite surprising. I mentioned that 82% growth rate. We really believe that's going to happen, especially now that China is pushing hard. I don't think traditional auto analysts still believe that could happen.
So Cathie Wood often refers to Wright's law. I've heard her refer to it in several presentations, and it's a fundamental part of Ark Invest projections. So let me quickly explain what exactly is Wright's law. And Wright's law is based on this guy, Theodore Wright, and he released a paper in 1936, now called Wright's law, which states that for every cumulative doubling of units produced, costs will fall by a constant percentage. So essentially what he's saying is that the more you make of something, the cheaper it gets, also known as economies of scale. So let me give you an example, and this is on the Tesla Model 3. So over here we have how much it costs to produce, $10,000, $100,000 and $1 million. And across the bottom is the cumulative units produced, so how many has been made. And we can see initially when they'd only made a few, the costs were in the region of $800,000. Just for one Tesla Model 3. But as you make more and you get economies of scale, the projection for Q4 2025 is that the costs are going to be coming down more towards the $20,000 to $25,000 range. And with innovation companies, which is what Ark Invest is built on, this really is key. Another example would be how much it first cost to sequence the first human genome. And it was around $300 million. And over time, this just gets cheaper and cheaper. And today, this is more around $1,500. So the game can quickly change. And for companies or products that at one time seemed impossible, all of a sudden becomes possible and it's ready for mainstream. Okay, and finally, to finish on, recently Fed Chair Jerome Powell gave an update on the latest Fed policy. And another big debate that people just can't agree on is, are we headed for inflation or deflation? Surely, with all this money printing going on, we are definitely going to be getting inflation, right? But then technology and innovation itself is deflationary. It causes prices to decrease, not increase. So, inflation or deflation, what does Cathie Wood think?
Chairman Powell of the Federal Reserve was not forceful enough, according to investors, in saying that we are going to keep interest rates down at all costs. I think a lot of investors wanted to hear him say, yes, we're going to try and control the yield curve. Well, by the way, that really has never worked in our country, so I don't know why investors would think that it would work this time. We believe that interest rates going up, and it has been a shock when you think about it, going from 1% to 1.5% on the 10-year Treasury in the span of a few months is like a tsunami through the bond market, right? That's a 50% increase in yields. This is crazy talk in the bond world, but it's happening. And I think there's a lot of confusion and risk aversion, which has spilled into the equity markets. We'll take the other side of that trade. Interest rates going up, long-term interest rates, we believe are suggesting that real growth is going to pick up. Now, I know there's an inflation component there, and we are going to see the base effect of last year's drop in prices during the coronavirus. So we could see the CPI in the 3 to 4% range. It will be temporary. And we do believe that deflationary forces associated with disruptive innovation, and they're massively deflationary, combined with the deflationary forces of those companies who are going to be put in harm's way by this disruptive innovation and who have leveraged up too much historically, usually to cater to short-term oriented shareholders and to buy back their stock, not invest enough in innovation, they are going to have to cut prices ultimately.
So there you are, guys, lots covered, so let me try and sum things up. Cathie Wood does not believe that this drop in the ETFs is something to worry about. Nothing has changed fundamentally, and in fact, for all the people dollar cost averaging in, this is in fact a gift. She does not believe we are in a bubble, and in fact, we're going to see huge growth rates over the next 5 years. And we may get a short spike in inflation, but this will be short-lived, and we are in fact in a more of a deflationary environment. So a lot covered, and I hope you found this useful. In fact, just one favor to ask, if you did find anything useful in the video, be sure to drop a like. That would be very much appreciated. If you haven't yet subscribed to the channel, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.